Hey, good evening, everyone. It is Thursday, October 31st. It's Halloween. It's the evening time. And I imagine on the East Coast, maybe kids have begun to trick or treat. Um, I wanted to do a live stream to go over today's stock market close as well as some big earnings out of Apple and out of Amazon. I also intend on covering United Therapeutics, which announced yesterday, but I really like what they had to say and I wanted to cover it. I also wanted to go over Intel, which is having a very good after hours trading session because they announced better than expected earnings. So we'll take a look at that. The market, as mentioned, really sold off. The Nasdaq sold almost 3% off, and then the S&P almost 2%. This was a pretty good sell off today. And some of the things, sometimes the market does certain things that I just don't quite understand. And I I read their earnings. I listened to Meta, and I thought Meta had a very good earnings report, but the market sold it off. I thought that Robinhood had a good earnings, ditto. And I thought Uber had a good earnings, and they sold off big. So I'm not quite sure what the market freaked out about. But I was willing to buy shares in those companies because I think they're just going to be worth a lot more in the future. It is good to have you, best of. Thanks for joining. I appreciate you joining. Um, let's take a look at the earnings that are on tap. Now, after the market closed, Apple announced, we'll take a look at what they had to announce. I believe they started to grow again. We'll take a close look and see what that's all about. I'll share with you my valuation on Apple, where I put Apple, as well as Amazon. I have a valuation on Amazon. We'll update that valuation together, and I'll share with you my comments on Amazon. And then we'll take a look at Intel, and we'll look at United Therapeutics, which I updated already. So, Mike, good to see you. It was a brutal day, but it's during 2 years of really good times. So let's not lose sight of the fact that, hey, speaking for myself, my portfolio is doing great in 2024. I'm good. And Bad Omen, good to see you, man. And it's been a very good Thursday. I'm a positive minded person, but my stocks did sell off, and I did lose, I don't know, $38,000 in stock market value. But that's just one day, and combined with the rest of the year, I'm doing great. So not going to let it disappoint me. And I am not holding Chegg, and I do not plan to buy Chegg. I looked at it recently and just not willing to get into Chegg. I think the environment's really tough for them. We'll see if they can dig themselves out of a hole they're in and hopefully make it, but we'll see. All right, let's jump into Apple. Apple and after hours trading today, compared to the other companies, it didn't do as bad as, let's say, Meta or Microsoft. Microsoft really sold off. And that is just, it's a little crazy to think how Microsoft sold off. There wasn't any rationale behind it. That's why I think the market sometimes is so darn emotional. In after hours, the market initially is not really sold on their earnings. We'll take a close look at it. This is maybe still the most expensive stock. I think Nvidia sold off today. So I think this is the most expensive stock on the stock market at $3.43 trillion. Of course, Apple makes the most popular smartphone out there, and understandably, they are very valuable. Now, I'm skeptical because I don't think they're growing fast enough to be this valuable. Microsoft is an example. They're growing nicely, like at 20%. These guys are not growing. So what gives? How come a company that's that valuable can't grow? That's a sign that there's weakness in the products they're selling, or maybe customers are trying out other solutions. Maybe the business is not as valuable as people might think, but that's just me as one individual investor looking at the company. Let's take a look at what they had to announce and then come back to their fundamentals. So the company this is coming straight out of their press release. I like to look at the financials and kind of navigate the financials and get the real news out of the stocks. So um, when we look at the 3 months that just ended, September 28th, the company did grow their revenue, I believe 6%. So that is good news that they are growing their revenue. Now, product sales did go up. It looks like probably close to 2 billion, and services went up about 2 billion, 2.5 billion. So in general, that's good news. The company did grow their top line. Looking at their gross margin, it also grew nicely by about $3.4 billion. That looks good. Trailing 12 months, you can see that the growth is a total of about 8 billion on a huge number, $391 billion of 12 months of revenue. So that's not a lot of growth. That's about 2%. That's pretty anemic. That's keeping up. That's not even keeping up with inflation. So that's been my biggest criticism of Apple is where's the growth? If you're going to be that valuable, better be seeing a growing business. You better have the best ideas that people can't live without and continue to expand the number of people that are becoming your customer. But that's not the case. Profits there, I'm sure. Now, their numbers look good. And from a cash perspective, their cash balance went up a little bit. If you look at marketable securities, we will update that in a little bit and update their valuation. Let's take a look at their cash flow, take a quick tour. And the trailing 12 months for 2024, they generated $118 billion of cash from operations. That is excellent. Up $8 billion. Very good. Now, their CapEx actually went down about 1.5 billion. Here's something that's interesting about Apple is they haven't, jumped in headfirst with this AI thing. Other companies have. If you look at Microsoft, they really jumped in headfirst. Meta's all in. Google's in. But Apple's been careful not to, jump in too fast. And you can see that they're preserving their capital. It may be a good idea that they do that. If AI ends up being a big thud, more hype than it is real, Apple's going to be looking pretty darn good, like they're really smart. But if AI becomes this massive thing, they're not, Apple's going to be behind. They're not going to build their own AI, platform. They're going to be borrowing somebody else's, which I think is going to be a vulnerable place for them to be. They're branding Apple Intelligence as an AI thing, but in the AI races, I think whichever platform ends up being the most useful with the best information and the best answers, best experience is going to win the minds over. And if that's not Apple, that could be a place where they lose a lot of credibility in the marketplace and lose a lot of customers. So we will see how that sorts itself out. But for now, they're really keeping their cash. So their free cash flow is cash from operations of $118 billion. And we subtract the CapEx, which is $9,447,000,000. So when I do the math there, I end up with $108 billion of free cash in the trailing 12 months, which is a massive amount of cash. That's why Apple is worth so much. That's why I focus on free cash flows, is because the most valuable companies produce free cash flow. That's what Charlie Munger would tell us, Warren Buffett, and a lot of legendary investors that have written books. So on the balance sheet, I want to take a look at cash. They have plenty of it. They have $29,943,000,000 of cash, and they have marketable securities of $35,200,000,000. $228 million. When I add those up, I get to $65.1 billion of cash readily available to invest in another company, to build something out. It's there to buy back shares, which is something Warren Buffett's been asking them to do. So they do have some debt. Debt has been coming down, but the debt's there. And the debt is $85 billion. So I will note that. And I'm not quite sure if I should add commercial paper. I think the commercial paper that they're having to deal with here is that they're such an international player, right? They have their iPhones manufactured in China. They have to have commercial paper so they can handle transactions, international transactions. All right, so that is Apple. Let's update the valuation I have for Apple and then come back to their overall metrics or their fundamentals. All right, so Apple. So their free cash flow, I had annualized it at 113. We're not too far off. And it grew nicely. Now I'm going to take the current cash flow and grow it by 3%. And that'll be the beginning of their cash flow. That's the starting point there. Now, Apple is a high quality company that really deserves a discount rate as good as anybody's. So I'm going to lower it to 7.5 because interest rates are falling. Now, they're not growing very much, so I can't grow their cash flows very much. But when I do that, I get a net present value of $2.6 trillion. The cash on the balance sheet was $65 billion. That seems kind of low, so I'm going to double check that number in a second. And then the debt is $85.750 billion. So let me double check to see maybe if they have some long-term, investments that should really be classified with cash. So yeah, they do. So we have marketable securities. Then they have marketable securities down here. Okay, so I'm going to add marketable securities that are not current, but they are marketable. So it means that they can sell them, in the markets and redeem that cash. And looking at term debt, I'm going to add term debt to their overall debt. So we'll have a couple of adjustments there. All right, so coming back to my valuation, that did not look right. I'm glad I double checked it. So this number is going to be the 65 billion plus the $91.79 million. Wow, that's a lot of cash, a lot of marketable securities. These guys may end up starting a bank. They certainly have enough capital to do so. But they would not probably want to do that because banks are not as profitable as Apple has been for a long time. So when I make those adjustments, I get to an equity value of $2.6 trillion. Now, when we look at their current market cap and so forth, and I'm going to open up a different screen that you guys can't see just so I can multitask. The market cap right now is really high. 3.4 trillion dollars. That's a lot of market cap. Shares outstanding is correct. Share per value 174. Stock price is trading at 225. So Cash flows, even though they're massive cash flows, there's a premium of 23% on those cash flows. Now, when we look at their earnings per share expected, and I'm going to use 2025 numbers, they're expecting $7.63. I'm going to keep the PE at 25. They're not growing. Now, they're expecting their earnings per share are going to grow, so I'm going to grow them by 8%, not quite buying into what analysts say. And I think that Apple is being priced at an 18% premium. Not a huge premium, but strategically, I continue to believe that Apple is vulnerable. They just are really skating by, really playing the same game for a long time. And in technology, that usually is going to end very poorly. And if we have a transformative experience with like AI or something, it could really replace Apple as the leading technology company. I think that's where I believe Apple over the long haul is really going to lose a lot of its value. Right now it's doing just fine, especially since they're not really investing a whole lot in AI. They gave up on their ideas of having the Apple car, which was a terrible idea to begin with. And they don't have any other ideas. It's like, hey, we have the iPhone and that's it. And they have hardware that's been there forever. I mean, they've been doing computers for 40, 50 years. They've been creating the software for their computers for the same time, the operating system. They have the accessories for their iPhones, but again, that's just like one product set. So I think that continues to be what I think is going to doom the company over time. And this will not be worth as much as it's worth today in the future. That's my opinion. Therefore, I've shorted shares of Apple. Now, am I making money, losing money? Right now, I'm down about 5% on my short position of Apple, meaning that I'm losing 5%. So at this point, it hasn't been a successful short position. But if the stock really goes down a lot, maybe it will be. We'll see what happens. The market is treating Apple fairly well. I mean, the company, again, 6% is not uh, incredible. It's not impressive. Compared to Microsoft, it's pretty poor. And NVIDIA will announce like in a month and a half. So really, the companies that are near Apple are growing much faster. So why are these guys so valuable? That's one of the questions that I have in general. I think it's a very well understood company. It's very well known. And these tend to be, an investment that investors are comfortable with. What's amazing is even Warren Buffett, it's really trimmed down his position, sold like half his stake in Apple. And I thought that was really going to affect the stock price, but it really didn't, which is interesting. Over the past year, it's up 32.66%, and you get that dividend, so you're up to 33. And over the last 5 years, 271. Beautiful. Just a really, really good performing stock. So that is Apple. They announced their earnings. The stock is down a little bit. We'll see how it trades tomorrow. Looks like we've got some other people that have joined. Bad omen if I haven't said hello. Hello again. Best of. So what's my expectation on the elections? So, I thought the elections were going to affect the markets far more than they have. Today was a really red day. I expected more of this like earlier in October, but I think we have, if you include Tuesday, we have 3 trading days left before we find out late into the evening who's projected to win the presidency. Well, at this point, I consider it like we didn't really see a whole lot of volatility due to the election. Can we see some volatility, for the next week and a half? Absolutely. I think the uncertainty. I know some stories have been pretty strong stories, pretty eye-catching, and I know that can really lead people to be nervous. And I'm a little nervous, frankly. I hope things get settled. Whoever wins the most votes gets the office, and we move on, and we have another peaceful transfer of power. Shadow guy, you were down 30.35%. Good job, man. That I've got to tip my hat to you, sir. Nice work. To avoid kind of getting stung on a day like this, that is very good work. Mike, you have to leave shortly. Have a fun Halloween. Enjoy the evening. Neil, good to see you, man. It's been a little while. And then Brad, very good to see you. So, what are my thoughts on Uber? Man, Uber went down a lot. I ended up buying, I think I bought maybe about $1,000 of Uber today. And it was down horribly today. Holy smokes. Um, and when I look at the earnings, so when I read the earnings, I, kind of try to assess, did the business show any fractures, like, oh man, their strategy isn't working or something's wrong with the business? And the answer to Uber is no. They keep growing and they keep getting stronger and more powerful. I think their future looks pretty darn bright. The market was set on certain metrics that it wanted to see. And the day, needless to say, was a sell-off day. So I think for Uber, it was fairly exaggerated. So it really sold off. I bought more shares. And what I actually found in their earnings was that their free cash flows went up much more than I expected. So that's really positive. Their growth was good. Their profitability was better than I expected. So I actually raised my valuation of Uber. So I actually think now, after seeing their earnings, that Uber provides a better investing opportunity for me. So I'm buying shares of Uber. And I will dollar cost average my purchase of Uber. Now, that's kind of a bad inside joke to everybody who's on the Discord, because we had a good discussion around lump sum investing and dollar cost averaging. I'm on the dollar cost averaging side, and I'm going to continue to do so. It's been working for me, especially as I tend to my portfolio. And some others might say that lump sum investing is a better way to go. And I hope they're right, and I hope they make a lot of money. And I hope I'm right and I make a lot of money. I hope we're both right and we both make a lot of money. So on Uber, I now have them discounted at 71% when it's all said and done. And I just think that the Uber business is really set with a lot of advantages, competitive advantages, ways for them to keep competitors out with their really big brand, very trusted platform. They're growing internationally. They have food delivery. They're looking to create kind of a super app where you have multiple things delivered via the Uber app. So all those things put together, my opinion on Uber is that it's a really good stock, and I'm going to buy more of it. I own a fair amount of Uber. The value of that investment went down today, needless to say. But let me take a peek at what that is valued at. I own $75,000 Uber. I think before today, I owned more like 85,000. But welcome to the stock market. And I'm willing to buy up to 100,000 of Uber and make it really an important position in my portfolio. And what was the other stock that went down? Robinhood. Robinhood just got killed today. Holy smokes. And you know what? I bought more Robinhood. I owned $35,000 of it. Before today, I owned $40,000 of it. I invested another $1,500 or $2,000 in it, and I'm still only a 35,000 investor in Robinhood. I'm willing to take that up to 50,000 as an investment. So I'm good with those companies. I think they're terrific companies, and they will continue to do well in the future. So thanks for asking about Uber. All right, so we covered Apple, we covered Uber, and a little bit of Robinhood as a bonus. Now let's talk about Amazon. Yeah, this is what I'm talking about. After a day that I had or the day that I've had with so many of my stocks looking like they're losing so much value, it's good to see one of my stocks do well. All right, go Amazon. And they're up 5.46% in the after hours. And I believe the market really liked their cloud business. Their cloud business looked phenomenal. And I'm going to jump straight into their financials. That's where the information's at. And as we look at their financials, um, looking at their cash flows might be a little too forward of me, although that's the first statement they showed. I guess they're pretty proud of it. Net sales increased 11%. And in a quarter, this company sells $158.9 billion of revenue. That's a huge company. I looked at Shell Oil, and I believe they do like 350 billion per year. These guys do 158 billion in a quarter. So that's really, really good growth for a company that size. So that looked great. Their AWS business, the most valuable part of Uber, grew at 19%. That's very, very, very good. So good job, Amazon. I've been wanting to buy as much Amazon as possible, a dollar cost average, but I've accelerated it. I don't know what I'm up to, but let me take a peek. I bought more shares today, and I'm not sure if that's reflected in here, but I have $36,000 of Amazon. I think I bought another $1,000. It's not quite reflected in here. And I want to take my investment up to $100,000 as soon as possible because this is one of the great companies and I owned it. I sold it at a gain. I regretted it and I got to get back in because it's one of the great companies. It's going to do well in the future. When I look at their value, Amazon does stand alone. It's a great run company. And I think the company is fairly priced if we look at where the cash flows are. I did update the cash flows. And I needed to update a few more things on it. So why don't I do that with you on this call? So I've got their financials here readily available. I'm going to review them and then I'm going to switch this document over to another screen so I can multitask. One thing to look at is their forward guidance. So they're planning on growing in the fourth quarter 7 to 11%. Okay, that looks good. Again, they're a massive size company. It's really impressive how they grow. You look at cash from operations, really has grown over the last 12 months from 71.6 billion to 112. A lot of cash. One thing I'll point out is their CapEx, because this AI build out is expensive. It went from 54.7 billion to 69.7 billion. That's a $15 billion increase in capital expense to gear up their data centers to provide all these AI services. So the 9 months ended September 30th. They're up to 450 billion. And the biggest quarter, I believe, is the fourth quarter because it has Christmas. And that's going to be a huge quarter. So, man, incredible company. Just really, really incredible. This is how they break out their sales: North America, international. Here's AWS. This is where a lot of their profits at, 29.2 billion. Where you look at their e-commerce business, that has a lot more revenue, but not a lot of profit. The profits with the cloud business. As we look at assets, cash balance remained about the same. Looks good. Debt remained about the same. So those balances stayed about the same. All right. So coming back to their valuation, I'm going to take a look at their fundamentals and then update my valuation for Amazon just a slight bit. I'm going to hold these where they're at. The discount rate 7.5, same as that I used for Apple. The market cap is higher. So the market cap, according to stock analysis, is $1.95 trillion. And I think I wrote it wrong. Okay, it's 1950. And shares outstanding is a little lower. They bought back shares. So there's about a 5% discount on the stock if we look at cash flows. Let's take a look at the forecast for earnings per share. And I'm using 2025 numbers since we're already on the doorstep of next year. This is a great company. I'm going to use a P of 36. So overall, I still think that Amazon is a very good buy for me. I'm going to keep buying. If the stock really rallies, I'll have to rethink that. But for now, I'm just going to keep buying, and I'm going to keep dollar cost averaging my buys into Amazon. I'm probably buying $1,000 to $5,000 a week until I get to about 100,000. Unless the stock really rallies, then I'll have to pump the brakes on that plan. But just Amazon's a unique company. There's only one. There's only one Apple. There's only one Microsoft. There's only one Google Alphabet, only one Meta, only one NVIDIA. And those companies are rare. And even with this huge valuation, when you look at Amazon, you're dealing with a forward P of 36. So you have a high growing company that's very powerful. One thing that was noted in the earnings was that they're beginning to advertise on their video platform, Amazon Prime. And those revenues are really becoming material for the company. And that's almost all profit. So that's just one more method of raising their profitability. So that looked really good for Amazon. Good job on that. So Amazon, I continue to buy, and I want it to be a good part of my portfolio. I'm going to build it out to hopefully $100,000 in maybe I can hit that mark by January 2025. We'll see. So that's Amazon. That's big giant company number 2 that we covered. Let me catch up on some comments here. So what is Shadow Guy's secret to success? Bonds and cash. Very good. Well, good job, man. I tip my hat to your performance today. All right, so we went over Amazon. I wanted to go over United Therapeutics. So they announced yesterday, and they're not a big company, $16.69 billion in market cap. So they didn't make it into like the top companies. And I didn't notice that they had announced, but I'm a stockholder, so I want to cover it. In a really, really red day, United Therapeutics stood nice and tall, up 3.48. Very happy to see that. I'm a really big believer in this company because they continue to consistently grow their revenues, and they have drugs that are very unique and help a lot of people. And they have an ambitious plan of growing human organs in a laboratory. And then they would be transplanted to people who are pretty much on a wait list. Either they get an organ or they live a very compromised life that is ended short. So it's a pretty ambitious company that really has had a track record of success. When I look at this company and I look at their financials, consistency, uniqueness, those things are there. And you see this growth rate, beautiful. Very good. They're up to $2.7 billion in revenue, and they're growing at 25% if you look at the trailing 12 months. So they're growing. Very good green flag. Their balance sheet's excellent. I believe they have a fair amount of cash, $3.3 billion, and debt. No debt. We like to see that. All cash, no debt. And when we look at their cash flow, it's growing nicely. We're up to 1.137 in the trailing 12 months of operating cash flow, and how much do they have to put back into the business in CapEx? 238. So we take those two numbers, net them out, and we get $8.98 million of free cash flow. And you can see that it's grown. They went from having some negative in 2019, and then from there, it's like, okay, we're going to be a cash producing company and we're going to grow. A very good sign, very good sign. So United Therapeutics, in my valuation of the company, I got to update some numbers, so I'll do them on the fly. And I had a 9% discount rate because they're a smaller company. They're a very known commodity for me, so I'm going to go to 8.5 because interest rates have been dropping. As interest rates drop, our discount rate, at least my plan is to lower discount rate. And what I'm going to do is right now, they're really much higher because for the first 3 quarters of the year, they're 898. So I'm going to take that number and annualize it. So I'm going to go trailing 12 months, annualized. And the formula for that would be 898.1 divided by 3 times 4. So that's their run rate of cash. I'm going to grow it by 10%. You saw that they're growing it much faster, but let's be a little conservative. And the cash flows are just really, really valuable. This is about, they had no debt, so that's good. Delete that. They paid that off. And really, it really stands much higher than their current market cap. Let me update that number. Their market cap is $16,700,000,000. Shares outstanding are 44.64. So it really has a big discount. If I look at the projected cash flows that this company is going to produce in the future. So consistent company produces high cash. Earnings per share is going to go to $27.80 in 2025. Just using an 18 PE, it's a smaller company, so it doesn't get the same press as these big giant companies, and it's really growing much faster than that. So go to 10%. So this is one of the stocks that I like having. I like rooting for small caps, and this is a small cap at 16 billion. And I'm glad that it's really working. It's been a stock that is working for my portfolio, and I think it has a lot of upside left. I'm up on the stock about 28%. I own about $26,000 of it. I didn't buy any more because it was up so much, but you better believe I'm going to buy more. Buy up to 30,000. It's a smaller company, so I don't want to get too out there with a smaller biotech company. I also own Catalyst, which has been doing really, really well. Both of these companies are just really good quality biotech companies. I'm glad I own them both. So United Therapeutics, great job, United Therapeutics, to have just excellent performance out there. All right, so let's talk about, so DZ Divs 32, you're loving Amazon. Me too, man. I'm loving Amazon. And let's take a look at Intel. Now, this is a company that I love and hate at the same time. I really would like this company to do better because the company historically has been so important, but maybe they rested on their laurels for too long. And now they're just a mess. It's like a dumpster fire. And who knows what's going to happen next quarter. This quarter, they announced earnings and they beat expectations. And I think the expectations were super low. But this is a $92 billion market cap company. If you consider that, you know, Intel 30 years ago, they were like the most powerful semiconductor company on the planet. They kind of controlled the show, so to speak. And you go, okay, what happened since then now? Well, there's like Nvidia's well ahead of them, Broadcom's well ahead of them, AMD's ahead of them, um, Qualcomm is ahead of them. I mean, I can go down the list of these semiconductor companies that have just leapfrogged what was the most dominant company in the industry. So, don't know what to say, but I just think they're in a mess. Uh, would they ever recover? Maybe. It's just going to be a mess. And it's such a distraction for me that I didn't have a ton of shares, but I did lose my shirt. And I sold my shares, got out of it. Glad I did. I think I sold here. And I thought I'd, just get this thing off my portfolio. I have plenty of shares in a variety of companies, and I'm doing really well this year. There's companies that I really believe in. And like I just talked about United Therapeutics, as I study what they're doing, I'm just so impressed with the caliber of their talent, of their intelligence, of how unique they are and how ambitious they are. All those things, man, awesome. I love being a shareholder of that company. Then there's companies like Intel that I would like them to recover. And maybe that was part of my error in investing in Intel. I believed in 3M, and that really did work. They came back. 3M is a quality company. Historically, they've been just a great company. General Electric, historically great company. They had bad years, like 3 or 4 bad years. Then they came back and just have rewarded shareholders. I thought Intel was going to be a similar story, and it may still be that story, but man, it was a rough ride. It just became too much of a distraction. Get it off the portfolio. I'd rather focus on finding you know, the next United Therapeutics that I can invest in and really see that they're a consistent communicator, consistent performer, up and to the right, rewarding me year after year. That's what I'm looking for. I do not need a problem child that's going to keep me up at night, make me age, accelerated aging due to a stock. No, thank you. I'd rather vote the stock off my island. And I'm buying into Qualcomm for semiconductors. Qualcomm's got their act together. They're growing and they're in a really good position within the space. So good luck, Intel. I'm glad they're having a good evening. And if you're an Intel stockholder, I'm glad for you. I hope you make a ton of money. I'm just out. It's too much of a drama. It's too many like of these events. Just crash and burn, crash and burn. I mean, how many times is this thing going to crash and burn? They've had like 6 or 7 moments where the market just throws the stock away. It's bad enough when I have to deal with the stock like, let's go with Uber, I guess. I mean, oh, wrong stock. So, man, this is kind of a tough day. Tough day to be stockholder of Uber. Then you look at the annual and you go, okay, well, it's a tough day, but a great year. See, I'm willing to take a couple like, oh no, sold off. Well, I bought shares. And then, oh no, it sold off. Well, I bought shares, but overall 68%. Just keep doing that, Uber. Keep growing, keep getting stronger, and we're good. We're good. It's rallying a little bit in the after hours. We'll see if they keep that rally, and I'm good with Uber. So really awesome week of earnings. Yeah. So Anthony, Intel announced after the bell. It looks like I don't have a report here. Let's see if the press releases have it. No. So I guess stock intelligence is not showing any respect to Intel, but Intel did announce. Let's take a look at what they had to say, what is driving up the stock. So revenue, 13.3 billion. So revenue compared to last year was down 6%. I think the good news is it wasn't any worse. Gross margin. They used to have gross margins of 42.5%. They're just 15% today. Oh man, that's pretty bad. Down 27.5 points. R&D is about the same level. Margin, they lost money, and they lost a substantial amount of money in the quarter. So I guess analysts thought it was going to be even worse. It was going to be like a dumpster fire with flames going up 20 feet. Well, the flames were only up 5 feet. Still a dumpster fire, but it's not as bad as they thought. So that's part of their announcement, and investors thought, whoa, well, that isn't so bad. I thought it was just going to be a complete train wreck. Looking at their revenues, the data center, they just didn't see how important the data center was. It was up 9%, but they just have never, I don't know if they've never been serious about the data center and they rested on their laurels, which was a PC business. But obviously, hindsight's 2020. They should have been far more serious about the data center. So that's Intel for you. I think when you look at their balance sheet, it's Halloween, so let's make this a spooky segment. Let's look at their balance sheet if they show it here. See if it's a spooky balance sheet. So they've got some cash in short term. Very good. When we look at that's fine. Debt 46.4 billion. Okay. Short-term debt 3.7 billion. So they're at about 50 billion in debt. 50 billion in debt. How much EBITDA do they produce? So 10.59 billion. So it would take them a little over probably 4.5 years to pay off debt if they needed to, which is a risky balance sheet. So the business is suffering. It's losing money. Its balance sheet's bad. Cash flows are terrible. It's like, man, what other piece of bad news can you throw at us, Intel? Look at their cash flow. They are burning $12.58 billion of cash. They're putting cash in that dumpster, lighted it on fire, letting it go up in flames. It's just a lot of problems over at Intel. So you got to have a stomach for a company like this. I thought the worst was behind them, but it's going to take a while to get this through the system. That's Intel. Congratulations to anybody who owns Intel. And what's going to happen tomorrow? The first trading day of November. It's a Friday. Well, the futures, I don't know if the futures are even active right now. I guess it's too early. Well, actually, it's showing a little bit green. It'd be nice to see the future be green. First day of November, end the week on a high note. And we will see. We will have to show up to see what tomorrow is all about. If we look at the earnings that are going to be announced, what's interesting is these companies, the oil companies, like to announce on Friday. ExxonMobil will tell us what the oil business is all about. Dominion is in the oil business. Enbridge is in the oil business. Simon Properties, a real estate investment trust. I'll cover these companies in the morning. Cardinal Health, healthcare company. So there'll be some good companies to go over. It'll be interesting. I might even cover Wayfair. It's always interesting to see that little company. And but tomorrow should be interesting to see where these companies trade. I'm expecting that they're going to announce good profits, good cash flows, maybe even raise dividends. But oil prices are what, make or break the stock price for Exxon, Chevron, as well as the oil companies like Imperial Oil, Shell, British Petroleum, BP, and all the other oil companies. If oil prices rally, stock prices go up. So we'll see where that lands. One last data point that I wanted to take a look at was crypto. It was having a nice month, and then it started to follow the stock market, and it traded down 3%. So we'll see if it begins to rally. We will see. So Michael Anthony, you bought some Pfizer. Interesting. Yeah, did I buy Pfizer today? I don't know. I may have. If it was down, I bought it. I am optimistic that Pfizer's going to really be valued a lot more. I like that in their earnings, they grew their top line in the quarter by like 33%. 33% growth of revenue. That's phenomenal. So good job, Pfizer. All right, everybody. Well, I appreciate you guys tuning in. And if you guys want to join the stream tomorrow morning, that'd be great. Let me wish you a really nice Halloween. Have fun, eat some candy, give out some candy, and have a good time. I will be back tomorrow. I'll be cranking out some videos, hopefully this weekend. I'll also be hosting 2 community calls open to members, paid members. If you'd like to attend, please look at the details, get signed up, and you can attend the stock investing workshop we have on Saturdays. And then we have a conference call on Sundays. So take a look at it and please consider it. So cheers, everyone. Have an awesome evening, and I will talk with you soon.